Good afternoon, everyone, and thank you very much for joining us today. Any advice contained in today's presentation is general only. It doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it's appropriate to you. Past returns are not an accurate indicator of future returns. Alrighty, so we today are going to have... Yeah, I know.
I don't know if I can ever talk again.
Well, my work's now done that I've read that disclaimer and shut Ivan down.
The rest will be a full silence.
Yeah. So on we go to the game. All right. So just a quick run through of the leaderboard. So a bit of movement on the leaderboard. For those of you that aren't playing the options trading game, get on. Yeah, Tim has been dislodged as leader. He's been sitting up the top. Obviously in a long position, long positions, hoping for the market to continue a move up, but no. Belinda, however, Belinda is, who was second, is still sitting there pretty. A few other people have moved up the ranks, so good to see. All right, bit of action, bit of trading activity going on.
Yeah, look at William Lake coming right back in.
Yeah.
Oh,
with his put.
Belinda was short and she closed it down. Anyway.
Oh well.
We're in the 50 today, so
yeah. Okay, so we've got a few trades to run through. I mean, as far as our lit longs go and our condors, not much happening there. James Hardy's approaching. It's basically the only thing that's sort of looking bullish today. Well, it was last time I looked. Coles is off a little bit.
Yep.
Right
there in your watch list, actually.
Yep.
You love Coles so much.
Yeah.
Do you go shopping at Coles or Woolies?
No, I don't. I go to Woolies. Yeah.
We go to this.
I despise them equally.
Yeah. Yeah. Eve actually goes to a special store, which is like a specialist kind of store in the hood that I live in.
Well, I've never traded Coles under COL code, so if it breaks out, I'm going to have a go. So anyway, right. So today we've got a couple of things to go through. Tim, do you want to take the floor?
Yeah, sure. So start with just having a look at the trades that were close to being flagged this morning, the lit trades. So there's JHX and Coles. We have had a look at these in recent sessions, so I'll just jump through them quite quickly. Of course, Coles has come backwards by almost a full percentage point, so it's not really a lit long trade anymore. We will keep an eye on it in the future if the market does turn around. And with James Hardy, it looks like it's had a pretty strong day, even with the correction this morning. And it is looking like it may be approaching the lit long flag again in the coming...
Interestingly on that, sorry, just to bump in, have a look at that. So this is where candles are really good. Have a look at the last 4 trading sessions, ignoring the second last one. So green candles effectively mean that it's been opening up lower and being bought up on the day. So there's a lot of strength, and you can look at it residually from the start of August. Pretty much all of those candles are full candles. There's some serious buying pressure in James Hardy still. You think that if it takes out that 25 and has a good close above it, good clean close, you'd think that you start probably having a look at adjusting your stop level because that 50-day moving average is far away. But you'd be looking at that. If it goes into a straight line, closes above 25 on a strong, decently kind of, I know I don't talk about volume a lot, a good volume day, you'd seriously look at that and then say the stop would be where that low of that, or the October low would be probably where you'd be looking to adjust it.
Looking at here.
Yeah.
Yeah, okay. Yeah. Interesting. And looking at a few stocks that we've picked out, so some major movers. The banks have been interesting the last few days. Obviously, they came down last week following the data coming out of the US with regards to manufacturing. And today it's had a bit of a fall. It has made a small recovery. However, now that it's trading below the 50-day MA, who knows where it's going to go. Any ideas whether you feel that this would stay under or would jump above? Or
I mean, look, we were talking about range-bound markers just before. I mean, this is the thing. Banks are so typically in line. You right now it's a terrible time to look at anything, I think. But you look at it. maybe you'd look at a potential, the two ways that I would look at it, there's two levels that I can see on that chart. One is 27 seems to be a pretty strong pivot point. So you'd think around 27, an iron condor type trade would be ideal. It's in between those ranges, probably going to get stuck in there. At this level, you'd be looking, I'd probably be saying a break of that October low again would be, a close below it. You'd be looking at potentially a bit of a short move. I mean, it'd be a pretty tight kind of spread that you'd be looking at. But yeah, 27, wait for that alert and do an iron condor if anything.
Okay.
Maybe with a slight skew towards the upside, because you think that every time it's taken 27, it's fallen less than $1, and then suddenly it's kind of gravitating to that. So you'd think that that's something that'll continue.
Jump over to
Yeah. And that, I mean, that uptrend line Tim's drawn on the NAB as well.
Yeah.
This looks pretty good.
Yeah, I mean, it's obviously it's had that breakout and it's just stalled, and you can see this is so typical of the banks where they rally up and then they just go and don't know what to do, and then right back into the range. So anybody who got on a LITT long did pretty well out of that, I think.
jump over to the next bank, CBA. So similar story, all the banks have kind of had a bit of a pullback since around this time last week, or this time last week. And CBA did open lower today. It is, looks like it's got a lot of price action around that $77.50 mark at the moment, and it is right between the 50-day moving average and the 200-day moving average, which is sense that it's kind of, it's probably near it's potentially near its natural stock price.
Try and add
over long-term and mid-term.
Just to, with kind of levels like this, probably pick the worst computer to be doing anything, since it's always so slow. But I just want to get a volume at price underlay. And this is, for a lot of the people that have been listening to us for a while, they know my general thoughts on volume. But I think that volume at price is something that sometimes is worth looking at, especially with something like CBA, because it's such a big portion of the index. Realistically, if CBA moves more often than not, if CBA or BHP moves, you're going to get a big move in the index. Okay, I'm going to fail at this because it's too slow. There's a volume at price underlay that you can do. I forget the exact name. Maybe you can drop it later.
VWAP?
No. VWAP is a volume weighted average price. There is an actual volume underlay, and it's got like bar charts that pop up, which shows you the volume traded at each particular price point.
Yeah.
And it's a really powerful indicator to see where the market's gravitating toward over a longer period of time. It is coming up, so maybe we can continue going on, and we'll just come back to this later, and I might be able to create it.
Sure, we'll jump over to the next one. In the meantime, so Westpac, another major bank. This one is also around its 50-day moving average. It is sitting right on a support line as well, near the 28.50 mark. And it's seen the price action basically wedged between the 50-day moving average and the support level here for the last week of trading.
Again, a 28 iron condor probably.
This level here.
The one thing about this, obviously, we just looked at three banks. If you're online, you're considering doing a trade here, don't do all of them. Because if there might be a big move, October might end up being the ridiculous sell-off that we've seen a couple of Octobers ago. 2007, 8, 29, yeah, sure, whichever you want. But if you're sitting there with 3 iron condors and 3 banks, you're going to get slaughtered in all of them. So the idea would be pick one, and you want to pick one which has got the best risk-reward ratio based on the higher implied volatility. I think that NAB is looking like that's probably going to be, if you want to go back to NAB, I think it's probably higher than 18. That's about the same, yeah. So you just price it up. 27 underlying, 20, oh, there we go. Just go into the filter. Can you just type, go to filter? Let's just going back to price. No, sorry. It's the on balance volume, I think, from memory. Yeah, click that. I think that's the one that I'm looking at. I believe. I don't know. We'll continue waiting for that one to load. If I get that wrong, then we're never seeing it. Oh, volume profile it is. Volume profile, that's what it is. Sorry. Anyway, keep going.
All right, so we'll jump over to the next one. STO, interesting one here. It's been range trading for a good part of the year. All the way since...
Ever since I remember that stock. It was the first stock I ever traded.
Oh, really?
Yeah.
Oh, wow.
Saved up some money, bought some Santos with a friend, and it's always been range bound.
Good to know.
Just never ending. It's range bound until it's not, and then it's range bound again. It's weird stock.
Yeah, this is where it's not, and I'm hoping it will go back up. I've got some calls on this one in the game, but it seems like it's pulling back quite a bit. Or was it puts? I can't recall now. But yeah,
That's amazing.
there's a potential for this one to maybe bounce off the 50-day moving average, and once again, if the 50-day moving average moves above that support line at $7.40 roughly, and then be a good move up towards the $8 mark.
I wouldn't touch it until it takes out that, that short term. Right now, the price action of those two last days, you'd be looking for a close above 750. I think right now it's trying to figure out what it wants to do, and it's, I mean, 10 cents isn't a big move, but it is for that stock. So
Yeah.
I wouldn't be backing your calls, mate.
Yeah, fair enough.
And that's going to be the one that wins in the game without you.
All right, jump over to the next one, the classic Woodside Petroleum. So now it's back on the lower range here. Was trading in the higher range for a period of time, ranged its way down into a new range, and now is on the lower end of this range.
You buy call option?
This one I do have calls on, and I got slammed. That's where my portfolio lost a lot of money today. Hoping for it to be maybe around here if the market's still going down.
Yeah.
I'm hoping for it to get even higher. Of course, the market will only go up, down, or sideways, and
Can you just zoom out on that chart?
who knows where it will go.
Jeez, yeah.
While we're pontificating this chart, if anyone's got any questions or wants us to look at any stocks, please type it into the chat box.
I'm thinking I'll actually participate in the game and just take the opposite position too, because I reckon it's going to continue selling off.
Game on.
Yeah, I mean, I'm half tempted to do it in my real account, but it just goes back to the thing that if I get into this trade, it goes away from the trading system, and then I know that I'll start getting emotional about this trade. And this is the kind of trade that if we both had it in our real account, we'd probably both lose. Yeah, because there's a good chance it's going to drop to 30. You'll get faked out. I'll be like, hey, I'm on top of the world, and I'll go back into the range, and then I'll freak out, and then I'll just get hit with time decay. Yeah, I reckon. But in terms of the game, this is a good trade I'd be short that. That trend's definitely down, mate.
You see the trend here, or just in general from here?
Well, just look at that, even that 50-day moving average. I mean, that doesn't really tell you that much, but you can just see that you'd get long as you'd see that momentum to start shifting low, like just dropping off. And I guess if you look at the ADX, it's losing momentum, which is that ADX is driven by that big move back to 34. But the fact that it failed so miserably over there, and it didn't even, it tried to close above that 50-day moving average, and just the rate of descent is so high. You've got a lot of support, but it's well below 30. And I reckon if I was a big trader right now, I'd be taking out the stops below 30, and then really making it look super weak, and I'd be accumulating below 30 passively if I was a fund.
Yeah, okay. Interesting.
I wouldn't be buying something that looks super cheap right now. Call of the century. Watch it.
I'll be losing sleep over it.
Yeah, you should. You should.
So we've got Wesfarmers next. So this one has just had a slow and steady increase since 2019, really. And it's not really going anywhere quickly, just happily jumping on top of the 50-day moving average.
Typical Wesfarmers.
Yeah.
Good dividend rate as well.
And bit of a worry though, it has fallen below the 50-day moving average just recently. Today even, and earlier last week. So maybe this could be the big turnaround. What are your thoughts?
Yeah, I don't know.
I'd probably looking at a trend line on it as well. If that broke, I'd be worried.
I'd get excited above a close above all of that resistance. But and when I say excited,
You mean the 40?
yeah,
40
I mean
bucks.
just to be clear, I mean it is Wesfarmers. Is there anything to be excited about? You know, I mean it's as far as grandpa stocks. This is I mean it's just nothing. Unless you're an iron condo man only, which you're not going to win in the game doing iron condos.
Yeah, there's been a lot of price action around this point in the last 2 months.
IV's very low. So I don't, yeah.
Even the iron condos are difficult.
Did we get to David Britt's question?
No, we haven't got to either of them. So Trudy's asked CSL really low ADX, indicating weak trend. Trudy, generally that's what the ADX is insinuating. The ADX is, for those that don't know, is the average directional index, something that we watch and excuse me. And the anything below 25, you're looking at a weak trend or symboling a weak trend. And the way that it's calculated is it takes into consideration effectively exponential smoothing averages that do their thing. And while this computer is thinking and connecting to the... We've got dial-up in here.
It is so bad, isn't it? I say every week I'm going to do something about it.
That's my best dial-up. So
Yeah.
I actually reckon it's your webinar. Yeah, that's ridiculously low.
It is low.
The general concept there is if it breaks above 240 and it has its 52-week high, you'd be second guessing a long trade because it's saying that there's no underlying buying pressure behind it. ADX doesn't give you an indication about direction. It's directionless. It's just to see the strength of the trend or the participation. But the breakout would be the signal of the breakout, as it may. The odds are if a stock breaks up, it ends up higher. Now, David asks no, I will clarify that you guys will have a bit of a giggle and a chuckle. If a stock breaks out above a 52-week high,
I'm agreeing with you.
Yeah. Most people think that that's where most sellers come in.
Yeah,
retail
absolutely.
sellers.
Yep.
And without anything, the odds are of it being higher for the next expiry, it's 55%.
Yeah.
The odds for the expiry after that, 60%.
Well, and the same phenomenon applies when someone goes short and it breaks up.
Yeah.
They go shorter.
Yeah.
And even though the trend's going completely against them, the odds are absolutely against them. And on the flip side, if they go long and it breaks down, they do exactly the same thing. So,
there you go. David, Aaron Condor on WPL, what are your legs?
where was WPL, Tim?
I think you're a couple of tabs away. Yeah, like completely other side. In terms of iron condo, depending on where the legs are, again, just to clarify, you're long in the game. I'd be generally a seller of that pattern. This is where trading is quite interesting. We can both have an opposite opinion on where we're going, and you might be neutral on the trade.
Mm-hmm.
we might all have 3 different opinions, and we might all be right or we might all be wrong depending on our time frame. So, it's probably important to note the time frame I'm thinking of is like next probably 2 months in terms of week play. You might be looking at it as a short term, like
1
this
week or so.
type thing. So you're just saying that you reckon the support's going to hold up. Is it going to stop around there? Probably. If you've got a WPL and one of your legs is around about $31, you're probably not going to be jumping at shadows either, right? If it's expiring in October. So it matters. Time is such an important thing to any trader, and it's even more important to options traders. So
David, if you've got that trade, give us the
legs and we'll look at
the
it.
legs and we'll look at it. The NCM
Iron Condor in play. Again, Ben, can you just give us the legs? I don't think I've got them in front of me. It'll come. It'll come. Yeah. While we're doing our stuff, quick update on the WhatsApp group that we mentioned last week, I think it was.
Yep.
We're going through our last levels now, so probably about 2 weeks away before we launch that. That's a soft launch, so for all of you that have said yes in the previous session, or if you want to be a part of our WhatsApp group, type in yes. So that's going to give us...
So just one step back from that.
I was about... But you're much better at explaining things.
So what we're working on a whole bunch of stuff at the moment in terms of communicating trades and information about the market and so forth. And we've played around with the idea of, internally, we've got a WhatsApp trade group where we discuss trades amongst ourselves. And we thought, a variant of this would be useful. And so what we're looking at is... if you're not on WhatsApp, get on WhatsApp, but we'll make a group available every morning. We'll make a quick comment on WhatsApp about the market and if there are any trades lining up and so forth. And then as the market opens, sort of 10:30, but whatever time during the day, if a trade lines up, then we'll put that trade in the WhatsApp group and send it out. So everyone that's on that in that group will be able to follow the trades, and it means that you don't have to be watching the market all day long. We can do that job for you, and as things pop up, you can opt in and go in and have a deeper
market maker prices will drop on there, and
so if there's a trade like an Iron Condor in particular, sort of where we might need to go to a market maker to get a good price, then if we see it Iron Condor, we'll put the trade in there so you can see it, and we'll go and talk to the market makers, and then we'll post the pricing into that. It won't be in a two-way conversation. If you want to talk to us, you can do that via the chat on the platform or email or call, but it'll be a really good way. So anyway, as Ivan said, if you haven't already requested that, type in yes and we'll put you on the list, provided you're a implied volatility member. All right, so
just on David, it's sold put 31, bought put 30, so just to clarify what I was just saying before, with where we're at the moment, we're 12 cents under. You're not going to be jumping at shadows with an October expiry.
Yes, most likely scenario, looking at that chart, will be that it drifts back up or stays,
I mean, if we're talking over the course of October, I mean, the reality is that, there's just a whole heap of stuff that can impact the WPL price. But everything else being equal, you'd assume that over the short term, it's going to get a drift. Over the next 2 months, I wouldn't be so sure that it's going to be above 31. But again, do you care? Right? I mean, trading and timing.
That's an October expiry, David, is it? I'm pretty sure it is.
NCM, NCM Iron Condor, again, legs, please, Bernard.
33.50, 36.50.
Sold 33.50, 36.50. It's right at the top level. Yeah, I don't know what to say, to be honest. October as well. So I was just hoping you'd give me that as well. Yeah, October 24th. Yeah, look, I'd realistically just keep monitoring it at the moment. This is the thing about Iron Condors. The more workshop you get about them, the worse they are. I've seen it so many times around the industry, just, with professional traders sitting there monitoring it. The thing about you just literally, the best piece of advice I can ever give anyone, including myself, is if you're an iron condor, if your expiry date is on the 24th of October, look at it on the 22nd. Yeah.
Yeah, absolutely. I mean, the caveat to that is it depends on how you trade them and how much capital you put at risk and things like that. Yeah. But what's happened traditionally, what we've seen is a lot of people when they're doing iron condors, because the traditional cost of doing an iron condor, they'd be paying like $100 a leg or something like that. They'd be putting like big positions on and maybe only on the XJO, and they'd be going quite wide spreads, and they'd be hoping to God that they never had to take any action, and then they would be rolling madly in different directions. That's a vastly different way of trading an iron condor to the way we think they should be traded. And when we go into a position, it's, it might be 10 or % of your overall capital allocated to trading iron condors. So if one goes bad, you're kind of looking at it and saying, well, if I do 10 of them, I think I'm going to get 7 right, where I make max profit, and maybe one where I make half and 2 where I lose it all. And net balance is I'm making really good money trading iron condors. So it kind of, if that's your approach, then absolutely, as Ivan said, there'll be just times where, you don't make money on that strategy and you just accept it.
Yeah. I think one of those things is that I've seen someone in US say something quite similar, actually, that the way that they used to trade when they didn't have access to all of this information, backtest data, the ability to run analysis, the way that they thought in their head was right was to do exactly what you were saying. And that's why our whole industry has been doing this in Australia, exactly, and still is doing this. We've just been, I guess, data-driven
as in rolling positions.
Yeah, as in rolling super wide, and then the stats, once people ran the stats, they were really surprised. And we found the exact same analysis independently of all of that stuff, and I was just really shocked to see, watching, it was a video or reading something that someone was putting up about some backtesting that they did, very similar process to what we followed in US, and very similar outcomes. You're selling a 30 delta who's a half standard deviation, gives you much better results than doing a 15 delta who's about 1 standard deviation. So really interesting to see that it's a global phenomena of some level, that there's the old way of trading, which, options gained popularity in a big way in the 80s. So it's not like it's an old product. Well, sorry, it's a really old product that, people used to, one of the Greek dudes, his paddle boat, used to use it for olive oil harvest in like the 14th century, whatever it was. So they're a really old product, because effectively insurance came out of options. But in terms of how it became traded as an exchange-traded commodity, only in the 80s did it become popular in Australia as one of the first markets. So a lot of the pricing and the mathematical side of it only really came into power over the last really 10 years. So only now can we see all the differences and all the anomalies.
And a lot of that pricing has been done behind closed doors. We had a funds manager on last night, for those that you're on the session that we ran last night, and question that I think you might have put to him was, why do so few funds managers actually use options? And it's interesting that there isn't that much technology that's available even for professionals to do the types of things that we're trying to do. Right, so even getting that back testing data, or having the ability to go and do back testing yourself, or it just doesn't really exist out there. So it's interesting, but when you've got the information, use it. All right, so David, where do you find the LITT trading rules on the platform? That's something that we'll send to you. Tim will get that across to you.
Part of the trading plan template as well, in the 10 by 10. So I don't know what video you're up to, David, but 5th video I think that you get has that template as well.
All right. Well, any other questions? Anything else anyone wants from us today? All right, Rowan, good question. I'll let you read it out and answer it, Ivan.
Hi, Ivan. Could please you share your... Sorry, Ryan, I had to put you on at the once. Could please you share your general thoughts on volume? I don't know what they are, but interested to hear them. So generally, we don't follow volume as an indicator. I'm not saying you shouldn't. I'm not saying you should. I just haven't had much experience with it. I should clarify, much experience giving me a indicative, important helping hand. Nor do I look at open interest for options. And the reason for this is because if you go in and every buyer has a seller, right? So what's really a lot more important, and the price tells you this, is where's the general direction. That's why we use candlesticks, because we can see that, we were looking at James Hardy, it opened at a certain point and every day it's had buying pressure, right? So that means that the buyers are paying up to get the stock. As a general market, it's a good idea to sort of pay a little bit of attention to the general market volume, because typically the old wisdom is that big traders will push on low volume days, they'll push the market accordingly. That's why most of the dodgy stuff that occurs in the market occurs pre-market, because it's easier to push the futures around. Not accusing anyone of doing it, of course, but it is a practice that people do to get a appropriate open. Having said that, look, my general view on it is it's just added noise. If you've got some kind of edge on it, use it. For me, I've never had any added value from it.
Yep. The trading scans, what does the shaded box mean? It's 50-day, 200-day moving average.
Yeah.
Yep.
So if you look at, for example, AGL 1913, 2078, two boxes are literally that. So the midpoint of those, and the idea is it's the Yara Condor type. One of the older ways that we were looking at Yara Condors before was as sophisticated as it is now with trading alerts. The idea was to look for a stock roughly in the middle of that, between the 50-day and 200-day moving average, and that sort of gives you the view. And at the moment, it's still valuable. So MQG 50-day and 200-day moving averages very close together. That sounds like an observation, Trudy. Is there a question around that? While it's coming up on our really cool, very sweet, quick system. Yeah. And it's not the internet, man, I'm telling you.
You're blaming the computer?
No, I'm blaming your webinar provider.
Oh, right.
Can you see the fan just swirling? I reckon most of the listeners can hear it in their headphones.
Ivan has been working on moving into the webinar jam, which I'm all good with, but we just need to do it. Okay, indication of consolidation like for an iron condor.
So premise, Macquarie is in the equity market, because that is important, is actually a relatively lightly traded stock. So generally good volumes, because it's like such a high price, it gets whipped around a lot. So it's important to not ignore that when you're making an observation like indication of consolidation. Typically, the thing that I would be looking at if I were you would be more, there's probably support level around 120, there's probably a resistance around 120.
Can I just
right in the middle
ask you a couple of questions around
Sure.
that? So when you say it's lightly traded and it moves around a lot, what are the implications with that in terms of pricing with market makers and the like?
It's the pricing becomes a lot more fluid. So you're pretty much, as soon as you get a quote, you should be trying to fill it if you're really trying to get out of a position. So it just means that if you're a market maker, Patrick has weighted the question appropriately. But if you're a market maker, the way that you effectively cover off the options position is you have to get the underlying stock. So either you already own it, or you have to acquire it, or you have to sell some down, and that's effectively they just play the volatility. So that the options will expire versus the stock, and then effectively you're neutral to delta movement. So if you don't have a lot on the depth, it's just a lot more expensive. They have to take a couple of price levels just to hedge out their exposure, unless they want to take a directional bet, which 99% of the time they don't want to do. So it just means that if you're trying to get away any kind of decent size, it's just going to move around. So, but I think that that was sort of sorry, was there a follow-up question?
No.
But in this particular case, what I was just saying is, you can broadly look and say 120 is a level, 130 is a level. You can see that there's been some gravitation towards those levels. We're right in the middle of that at 125. If you're looking for an iron condor, you could use the condensing 50-day and 200-day moving average as an indicator, and you'd probably be selling a 120 or 130 leg. You'd be pricing it up. You'd be seeing the risk-reward ratio. Again, it goes back to what I was saying earlier. Trades that you're putting outside of the trading system, you have to have a very strong plan around what you're trying to achieve. It goes back to the theme that we were talking about yesterday, Kieran was talking about. What are you trying to achieve? Why are you trying to achieve it? And, what do you ultimately want out of what you're doing? The thing about this is it really lines up as a good-looking trade. But what are you going to do when it gets to 130? What are you going to do at 120? How long of a time frame? It goes outside of the trading system, which means that you're just much more likely to panic if things don't go right. And also, is the reward sweet enough if it goes your way, and will it inhibit bad habits going forward? Now, I'm not answering those. They're not rhetorical questions. They're questions that you should be thinking when you're going and pricing up stuff. That's just ultimately. You want to take a punt on it? If you want my approval, go for it. But just, those are the questions. It's much more important to think about the exit and what they look like in good and bad scenarios versus does a trade line up.
Excellent. All right, guys. Well, thank you to everyone for turning up today. We'll call the session to a halt now.
You're hungry.
And we'll see you back online. So next Tuesday night, we've got Graham O'Brien joining us. Graham O'Brien's the head of derivatives for the ASX for the webcast discussion. So we'll be going in and talking, well, whatever occurs over the coming days, we'll be talking through that, and he'll be presenting on what the ASX is seeing in the market at the moment and taking any questions you might have. Quite often people want to ask him questions about market makers and other things like other products that might be coming into the market, things like that. Always got a lot to say, Graham, always very interesting. So we'll try and get along to that session as well. Now, as far as booking into that, you'll be able to book in off the morning report. There's a link off those morning reports. Or if you go onto a Reach Markets website, you can pick that up there as well. Beautiful. Thanks, everyone, for coming along. Thanks, guys. Have a wonderful week ahead. Cheers.